Hello my darlings, good day and welcome. So this is me coming out straight from the charts with lots of lessons learned this week, guys. Something I learned this week in trading is this: see, just save yourself unnecessary stress and trade quality setup.
How many times
that is the best way to cut your losses. Stick with me because I'm going to show you a detailed, eye-opening video that will make this make much sense to you, because this wasn't even really making so much sense to me until I saw this video. Let's just check out the video.
I started learning how to trade 7 years ago, and it took me 3 years to learn this one secret about price action that changed my trading forever. Before I learned this secret, some days it felt like every trade I would take, I would lose, and other days it felt like every trade I would take, I would win, and I didn't understand why. In today's video, I will reveal the secret I learned about price action that helped me go from an unprofitable trader to a profitable trader. This price action concept will not only increase your win rate, but it will help you only trade high quality setups. And a secret to price action. In my opinion, this is going to be one of the most important videos that you can watch this year, because today I'm going to talk about one of the biggest struggles that I see a lot of new traders facing. When new traders come into the market, I often hear them say, I traded so well for the last week, but lost all my profits in one day. Now, if this is you and you've said this before, you need to understand why that's happening. The biggest reason this is happening is because the market does not move the same every single day. There's really two specific ways a market can move. Number one is a trending market to the upside, and then number two is a trending market to the downside. These two specific market case scenarios for myself, because I trade the break and retest, I'm a momentum trader, these trend days are the best case scenario for myself. These are the days that I really do well in. Now, the other way the market moves is chop. This is where you don't have a clear direction, but rather you have a high and you have a low, and the market is not doing anything in between. Therefore, you're not getting continuation on your setups. Now, these are the two primary factors of how the market moves, but just because you understand that you have trend days and chop days doesn't mean that a day can't have both. Now, what does that mean? This means when a market is moving up and having a trend day, this may stop and it may just consolidate for the rest of the day. And because of this, if you enter in for a break and retest setup for a new high of day, you'll never reach high of day because now it's chopping. So how are we able to avoid these days to have the highest probability days, so it doesn't feel like some days you win all the trades you take and other days you lose all the trades you take? Well, to answer that question, we need to talk about which day you believe is easier to trade. Now, we have 2 days here. This is day one right here, where we can see the market moved up in the morning, and then we made this low, we made a new high, but then we can see that overall the trend is sideways. And then we have day two. Here we can see the market moved up, we made this high, we made this low, we consolidate a little bit, but we continue to slowly push up. In both of these days, which day do you think is easier to trade as a new trader? If we look at day one, as you can see here, this is the exact same day that I just showed you, but what actually happened on this day? Let's say we were trading the 5-minute opening range strategy. If you don't know what that strategy is, I talked about it in last week's video, so make sure to watch that video. But as we can see here, we got the break of the 5-minute high, we came back for the retest, we put in a strong price action candle as well, so we enter into the trade here looking for high of day, but unfortunately this trade doesn't work and this is a $500 loss. Now, for this first specific trade, you can see when we pushed up and had that retest, this was a decent setup. The market was trending at the time. However, when we took this loss, what do new traders do? They want to make the money back. And because of this, you see this second retest and consolidation. So what do you do again? You enter into the trade looking for high of day with your stop loss simply below this previous pivot level. Now, as we can see here, because it's a choppy day, remember how I said on choppy days, you most likely will not hit high of day because the market does not have the momentum or continuation to hit high of day. And therefore we can see, though this trade almost hit our profit target, it came all the way back down and we had another $1,200 loss. So now on a day that we were only supposed to lose $500, we lost $1,700. Now, because of this, as a new trader, you already lost $1,700 and therefore you want to make your money back. You're going to be a little bit more aggressive with your entries and you take this third retest off the exact same level. Now, it didn't work the first two times, but you think, Hopefully it works this last time. And this last time it does end up working and you make $600. So you do recover some of your loss, but because you made that $600, in your head, mentally, you think it's okay to trade these type of days. In reality, what you have to understand is you just took 3 trades and ruined your psychology by taking the 3rd trade. You're still red on the day, and this 3rd trade was definitely not an A+ setup. Now, when we look at day 2, we can see that this day was a little bit more trending. And what happens on day 2? Well, if we trade the same 5-minute retest, we can see we got the retest, we had our 2R multiple, and we made $700 on the first trade. Now, let's say on day 2, like day 1, you wanted to make more money because you're a new trader. Well, guess what? This is the day where it seems like every trade you're taking, you're winning because the market is trending. When we see this high being made, we want the break and the retest of this high. We take this again with the 2R multiple, and once again, another $400 win. So out of both of those days, it is clear to see on day 2, the day we were trending, the market rewarded us, but at the same time, it was very stress-free trades compared to day 1, where we had to fight to make just $600. On day 2, we took 2 good trades, won both of them, and they were good setups. So the main thing I'm going to teach you in today's video is statistical edge. Your trading edge is designed for certain conditions. Your trading edge is not designed for all conditions. Therefore, unlike you think, it's actually better to not trade daily. Now, whenever I tell new traders don't trade daily, they will do it for a week or 2, then their old habits will catch up and they want to take trades on a daily basis just because they want to be in a trade. You need to understand all those losses that you're having or those low quality trades you're having is because you're not following your statistical edge and you're not trading your strategy or setup for the conditions it's designed in, because every single strategy has certain conditions that it needs for you to have profitable trades. So why should we focus on statistical edge?
That was a lot of value in one video. So in summary, whatever trading strategy you adopt, make sure you wait for your trades. Make sure you wait for quality setup. And lastly, make sure you go check out the full video. See, don't leave this place without going to check that video, because you're going to learn so much. You're going to learn a lot of eye-opening tricks in the market. I have the link in my description box. So that'll be all for this video, guys. See you in my next video. Bye.